Gold is surging again, and smart money is paying very close attention. The price just jumped as the dollar weakened, Treasury yields eased, and traders started reassessing inflation risks after a pullback in oil prices. When you see gold moving like this, it usually means big investors are looking for one of two things: protection or flexibility. Or, in this case, maybe even both. So, why does gold rise in moments like this? It's all about real yields and the dollar. Gold tends to benefit when real interest rates come down and when the US dollar softens. Think about it. A weaker dollar makes gold cheaper for buyers using other currencies, boosting global demand. At the same time, lower yields reduce what's called the opportunity cost of holding gold. Since gold is a metal that doesn't pay you any interest or dividends, it becomes much more attractive when other assets, like bonds, aren't paying as much either. And that's the exact backdrop we saw in the markets today. But there's a bigger story here, and it's all about uncertainty. Right now, traders are juggling three major moving parts all at once. First, there's ongoing geopolitical risk, which always has investors on edge. Second, we still have important inflation data coming up that could change everything. And third, everyone is watching the Federal Reserve's next decision. Reuters reports that the Fed is widely expected to hold interest rates steady at its upcoming meeting. But the real focus is on potential rate cuts later this year. Gold tends to thrive in an environment where investors think economic growth might be slowing down, but monetary policy could eventually become looser to support it. Now, this doesn't automatically mean you should rush out and go all in on gold. What it does mean is that gold is acting as a signal. It's telling us that investors are still looking for a hedge against potential bumps in the road. It's not about panic, and it's not necessarily pointing to a recession tomorrow. It's about a calculated desire for protection. So, here, ask the real question we should be asking. Is gold warning us that market volatility is here to stay for a while? As of right now, the answer looks like a resounding yes. And when you see gold, oil, and interest rate expectations all start moving in tandem, that's when the markets get really, really interesting. Thanks for watching, and be sure to subscribe for more insights.